All right, are you guys ready to get things kicked off today? If you're on this call, turn your cameras on. It would be awesome to be able to see you. I only see about 10 of you on here. It'd be nice to see some faces. It's Friday. It was a great week. We have an awesome panel today. Ed Week's been going great so far. We've had an amazing week yesterday. If you weren't on the call, we had Paul Levy from the Center City District dropping a ton of knowledge about what's going on in Philadelphia. Very educational, very informative. And we're going to keep things rolling today with a topic that is really important to me and should be really important to you as well. Today, we're going to be talking about building wealth through real estate. And, if any of you have heard me speak before, when we talk about wealth, my definition of wealth is having $1 more of passive income than you have in personal expenses so that you can fund that perfect life through your passive income while you're making money while you sleep. So today we have some amazing panelists on here today. We have Mike, we have Rob, we have Michael, and we have Becky, and they're going to be dropping a ton of knowledge. We're going to have some fun here today. I'm going to be asking some fun questions, and we're going to be asking some serious questions. And so I'm going to roll right into it, and I'm going to kick it off. And my first question is going to be for the roll the dice here. Becky, it's for you because you're at the top of my screen. Ready? Becky, unmute yourself. Michael, unmute yourself. Rob, Mike, Stom, unmute yourself. Can you guys unmute?
Here we are.
Cool, now I can see you. All right, Becky, first questions to you. We're going to have some fun. How many golf balls fit in a 737 plane? Kidding, I'm kidding. She must be frozen. Are you frozen? Yeah, she's frozen. Okay.
Oh my God. Well, I read somewhere recently there's. Can you hear me?
Nope.
Hi, can you hear me? Wait.
Now we can. You were frozen for a
Okay.
second.
Sorry, I don't know what's going on here. So I read recently that there are over 1 million leaves on a tree. So if there's 1 million leaves on a tree, I'm thinking like 3 million golf balls.
That's actually correct.
Is it?
I'm just kidding. First question, first serious question. I want to talk about wealth. And actually this question is going to be for everybody. I want to hear, what is your definition of wealth? How do you define wealth? And what is your wealth building strategy and what is your plan? This question is going to go to everybody. Becky, I want you to kick it off.
So real wealth is being able to give back. It is so important to me to be able to give back and make an impact in my community and to the causes that are near and dear to my heart. And the way that I'm able to, a goal in order to give back, which I commit to giving back 10% of all of my income. And in order to meet my very aggressive donation goals, and I have to generate money through real estate sales and then real estate investing. So I think you touched on it, Noah. My end goal is to have more passive income coming in than my monthly bills. So that's really when you have real wealth and building generational wealth through compound interest and not just the hustle and bustle of the wheel of going onto the wheel of selling real estate. So getting that monthly revenue stream, the passive income coming in and be more than what your monthly expenses are, and then being able to give back and make an impact in your community. And I think that's what real wealth really is to me.
Awesome. Thank you. All right, Michael, next question is to you. I'm going to give you the fun question first. Actually, I'm going to give you the same question, but the fun question is, if we looked at your browser history, what would we find? Kidding. Don't answer that. Don't answer that.
Well, that was a good question.
Yeah. I think a lot of people got really nervous when I asked that question. All right. So Michael, you've been in the game for a long time. I know that you buy stuff, you invest in stuff. You've been doing it for a long time and you work with investors. So what is your definition of wealth and what's your wealth building strategy and what's your plan?
Okay, well, that's a good question. And to answer the first question, I was actually looking for a good movie to watch tonight.
Okay. Thank you. We were all nervous.
Yeah. This is really important. I think everybody should write this down. All right, you ready?
Yes.
Day is a good day when you get a check. So building wealth is, getting money from, checks or money or income from their various different sources. Could be, rentals, could be lending money. It's flipping a property, renovating a property. It could be your, investments in your stock portfolio. So it's good. Building wealth is diverse. You have to be diverse. You can't put everything into one pot.
Yep.
I've been buying and selling real estate. I started buying houses in Fishtown when they were like $35,000. So, that was a good start. The first round, they were 35. The second round, they were 60. So, buying and holding is a good way to really develop, a good successful strategy to retire.
Yep. That's awesome. All right, Mike Stom, you're next on my screen here. If we looked at your Instagram search history, who would we see that you're stalking? Don't answer. Don't answer. Don't answer. But so how do you define wealth? You're involved in a lot of development stuff. You're all over the place now. Talk to us a little bit about your strategy. And I'd like to hear the specifics about, long-term plan as well, as far as how you define wealth.
Sure. I think wealth to me is about creating all sorts of kind of income streams. When you start out, I run a real estate development firm here in Philadelphia. Everything starts out really, really small. You're lucky to, rehab a single family house, and then that kind of turns into two of them. But as it kind of evolves, we look for, short-term flips for cash flow purposes. We run a property management group. We're fee-based. Obviously, the predominant aspect of our business is passive income. We run a pretty decent sized rental portfolio, but I think wealth continues to evolve. Some are driven by money, some are kind of driven by, the sense of creativity and accomplishment. But, I think, connecting through your network and finding ways to kind of, passively make money, both in your predominant business and kind of investing in, different opportunities and interesting stuff that pops up. I think it continues to evolve based on kind of opportunity in that moment.
Okay, no, that's awesome. Rob, same question to you. And I think a lot of people on this call, I think they know who most of you are, but Rob, there's a lot of Keller Williams people, and they may or may not know who you are. So tell them a little bit about yourself, and then talk to us a little bit about how you define wealth and your wealth building strategy.
Sure. My name is Rob Lawrence from the Vanguard Realty Alliance out of Westchester. I'm a real estate agent and investor. I'm kind of on the front end of it, just getting started. I look at wealth. I'm big on tracking net worth. I mean, I love tracking net worth, like in a nerdy amount of way at a time. I've been tracking my net worth for like 15 years. When I look at building wealth, I kind of look at this little graph and I'm just like, am I moving the needle up by doing this, or am I moving the needle down in terms of, my valuation, my assets? And I'm always thinking about whatever I'm buying, like however I'm putting my money to use and my time to use and my relationships to use, how that's sort of impacting that graph. And also, I really think a lot about the income producing assets sides of things. So, and I even think that one thing overlooked is like relationships, like our network, how important that is in terms of the wealth that we really have.
Yeah, there's a big difference between wealth, being wealthy and being rich. And I think a lot of people, when they grow up, they say they want to be rich because, a lot of people's parents don't have the conversation with them about being wealthy. And to me, the big difference is being rich is, you have a lot of money in the bank, but being wealthy, you have a lot of money coming in on a regular basis without working. And when I talk about, to a lot of real estate agents, I say, if you stop selling houses tomorrow, how much money would you have coming in passive income? And the answer, and I say, do you have enough to cover all of your expenses? And the answer that I get from a lot of people is no, not enough money coming in to cover your expenses, or no money coming in to cover your expenses. And the truth about wealth is and retirement is you can retire today if you have more passive income coming in than you have in personal expenses, because it will cover your expenses. Your passive income will cover your expenses. You don't necessarily need to have any money in the bank. And that's the big difference that I see with people. And, having that long-term perspective on your wealth building strategy is what it's going to take. So we'll dive into a little bit more about strategies as we go. I'm going to kick this one back over to you, Michael Cohen. I want to talk a little bit about funding investments. Okay. And I want to hear a little bit about how you fund your investments. Where do you get the money to fund your investments, and advice for people on how they would get started. But I want you to focus the question a little bit on what it was like when you first got started in investment and where you found the money, and now where are you getting the money and funding these investments. Michael Cohen, we'll start with you.
Okay, so that's a really good question. So in the beginning, it's obviously going to be a little bit hard. I mean, you may have to reach out to a partner. You may have to find equity somewhere. You may have, find money from a parent. So in the beginning, it's always difficult. You need to find source funds. It seems like today there's a lot of hard money available. And I don't think hard money is really a bad idea. I mean, I've used hard money in the past. I'm sure mostly everybody has. You just have to build it into the deal. The deal has to be good enough. Once you can get down the road and start getting a few properties, underway and income producing, then obviously you can go to the bank, or you can go to somebody like Spring Garden, which the rate's a little bit lower. And then you can start building equity. I took a credit line out of my house. I actually took a large credit line out of my house, and then my primary residence. Then I took a second line out of my house. And believe it or not, I actually figured out how to convince somebody to give me a third line. So it's always good to have money available. As a really good deal comes your way, you want to be able to act on it quickly. So you got to set up and have your money in hand. I mean, having partners or forming limited partnership is good in the beginning. I'm sure everybody's done that. I'm sure we've all partnered out on deals. But in the last 5 or 6 years, I've actually bought out all my partners, and that way my portfolio is mine for when I retire, because I'm a little bit older than some of the folks here. But I do want to also add in one other thing. While it was on my mind, that I have a friend of mine that works for the IRS. And I'm not going to tell you his name, but he said that 90% of the people that he audits are all wealthy people, and he claims that 90% of them have all developed wealth through real estate. So you have to buy real estate. You're on the front line. You have to start buying 1 or 2 houses a year. You can figure out a way. If there's a will, there's a way. You can start out with a lower income rental, or you can find something that's that's a value play. But if you buy 2 houses a year, 10 years goes by quickly. 15 years, you take a 15-year mortgage, that's going to burn off very quickly. And the next thing you know, you're going to have these things, you'll have rental properties clear and free. And, but I just thought I would mention that. But, if you can't source your funds, partner. That's my suggestion.
That's true. Becky, same question to you. Talk to us a little bit about how you're funding your investments, what it was like when you got started, where you're at now.
Yeah, hopefully you guys can hear me a little better.
Much better. Cool.
So when I first started investing, I knew that I had to start investing in real estate in 2016. I was selling real estate for 4 years, and I worked with a lot of investors, and I knew that it was my duty as a real estate agent to invest in real estate. But I didn't know what I didn't know, and I kind of dragged my feet. And I was on a listing appointment at a property that was my first flip. And I, thank God, saw the numbers. I'm like, there's no way that I can pass this deal up. And I didn't know that I had the option of private money, hard money, leveraging my home to take a home equity line of credit out to purchase it. So I actually saved up $85,000 in cash from commission sales, and I bought the property in cash because I just didn't know any better. So my first flip, I paid cash for, and then to fund the construction, because that was the acquisition price, or acquisition cost. In order to fund the construction, I found one of my wealthy friends, and she was my private money lender. So it was 12% interest, amortized over a year. And so she made a really nice return on that. And that's how I was able to complete my first flip. And I bought it for 83.5 and I sold it for 332.5. And it was a nice one. And I spent about 120,000 on the rehab. So, but that was obviously like a unicorn. That obviously doesn't happen all the time. But I just didn't know what I didn't know. So my second flip, I found hard money. So I established a great relationship with a hard money lender, and I was able to, and he's also in the conventional lending space. So he does a lot of my deals, with my residential retail clients. So I was able to talk down the points. And I think he only charged me like 1.5 points to fund. And then my interest rate was 8%. So I know that's on the lower side. I think hard money is usually a little bit more than that, but I was able to leverage my relationships. So again, relationships are so key in this business. And then another one, again, I use private money. So private money, I feel, is definitely cheaper than hard money. But just asking the questions and networking. And I actually have one of the agents in our office that's a good friend of mine. She's doing a flip right now that used private money. Didn't even have to put any money out of her pocket. Nothing, no down payment, nothing. They rolled the points into the amount that they financed up to 65% ARV. Literally didn't have to put any money out of pocket. And just so many people don't even know that's even an option now. I thought back in 2018 when I first started flipping that I had to pay cash for these properties because I just didn't know any better. And then obviously I've come a long way from that, but that's, I really rarely use my own money anymore. I will use hard money and then get a loan from like a private money lender to put the down payment down if I'm using hard money, or I'll just go all private money to acquire the deal and then fund the flip.
Awesome. Thank you. All right, Rob, question to you. Same question. Talk to us a little bit about how you fund your investments and what it was like in the beginning and what it's like now. And then we're going to, last question, same question. We'll go to Mike after that.
Yeah, sure. I mean, I think I'm, like I said, more at the beginning. And I have to think very strategically about everything I do. So my first property that I bought was just a regular FHA loan that I lived in, rented out. And then this house, I was a conventional loan, 15% down. So my wife and I just lived much below our means in a townhouse while making, 6 figures each, and just stacked cash until we had a sizable down payment. We bought this house. I was very careful about selecting a deal. And then we bought this house, and I bought it back in January, and I was able to BRRRR the house. Basically, I bought it and renovated it, and then I just HELOC'd back out of it $100,000. And now I'm going to use that $100,000 as a down payment on another BRRRR where I'm trying to buy a Airbnb in Florida. So I'm pretty standard with how I think about the financing. I haven't got into hard money myself. I think a lot about bad debt versus good debt, and about how bad debt in my life, $10,000 in credit card debt might be, $100,000 in mortgage debt that you could take on. So I'm looking at maximizing my income that I can borrow against, both me and my wife, and going a pretty conventional route right now with low interest rates in place. So that's kind of where I'm at personally.
Okay, appreciate that. All right, Mike, same question to you, but a little bit different take on it. I think a lot of the projects that you're doing are fairly large. Money is becoming a little bit more difficult to come by these days, especially with the banks not wanting to take on risks. Talk to us a little bit about what it's like these days in financing properties where you're getting the equity and the debt as well, and how difficult that's been lately.
Sure. It's definitely changed, since March. Taking a look at the equity market versus the debt market, on the debt side, on a larger multifamily deal. It was pretty over the counter, prior, early on in the year to be able to finance 80% of the total project cost. Banks, have really pulled back kind of the faucet a little bit there. You're much closer to 75, 70, but at the end of the day, it comes down to the relationships you've built. Let's say you go out for a term sheet to 10 banks, there are still some lenders that are going 75, 80, but it comes down to track record and the rapport you've built, and the number of projects that you have in the pipeline, and quite frankly how strong the deal and the sponsor is. The equity side, real estate in Philly, continues to be a strong investment. I mean, we've seen on our end, we've been able to hit our sales numbers, our rental numbers. So we haven't really seen a pullback on the equity side. We've built a track record of the last 10 years with some high net worth guys that continue to be interested in large equity checks. But the capital markets, especially on the construction side and even the permanent side, there's a lot more kind of conservative underwriting, vacancies being covered different. There's COVID reserves, et cetera. So, it'll be interesting to see what happens over the next 6 to 12 months, and, how many of these Philadelphia-based banks, continue to lend in the multifamily space that, really, captures the majority of their portfolio.
Yeah, I think before COVID, if you had a good relationship with the bank, they would fund 80% of the deal, 75% of the deal sometimes. Now, a lot of these banks, they want they'll only fund 65%. And which means you have to come up with a lot more cash. So in a bigger deal, that can make or break whether or not you're able to do the deal or not. It's really changing things a lot. Mike, I'm going to stay with you for 1 second. We're going to switch to a different question here. Tell everybody a little bit about what type of investing you do, the different property types that you look at, and how do you value a property? How do you know if it's a good deal?
Sure. The core business of ours is, a ground up boutique apartment building, really river to river, but we've predominantly focused kind of Northwest Philadelphia, Art Museum through Chestnut Hill. What we look for, is, we look for street exposure and a site that has, favorable zoning, CMX2, CMX 2.5, RM1, so forth. That's, 10,000, 15,000 square feet at a minimum, where you have good exposure, you have a low basis in the property. But what we're really looking at is so many people get all, hell bent on, what you're buying your front end unit for, where we look at is kind of back end value versus what's our all in, per unit cost. So depending on the capitalization rate on a specific deal, we're looking at, our yield to cost to have, a 250 basis point spread on what the exit cap rate is. So we're really sizing up a transaction based on kind of projecting what the to be built project would be. And I think that's how we kind of look at the deals. Our core business is to, build a value add project, stabilize it, stay on as the property management group, and then take it into the permanent market, refinancing it with a permanent lender or an agency, Fannie, Freddie, and so forth, pull our capital out of it and hold it for, 7, 10, 12 years. So that's kind of how we look at a rental deal. On a flip, which is, no more than 10 to 20% of our business in a given year. We look at, net profit over total project cost. So we kind of look at it from an unlevered perspective and are really looking for, 25% or more on an unlevered kind of margin. So when you lever it up based on your equity, obviously it sizes up quite a bit. But, the with construction numbers going up and, the low barriers of entry in those deal sizes, the margins over the last 5-7 years have really compressed quite a bit. But there's still some deals out there, as you guys know.
Yeah, awesome. And that was a great answer and very, very high level. You used a lot of big words, so I just want to break it down for everybody just to make sure everybody understands what you said. So just so I'm clear, when you're doing a flip, you take the projected net profit divided by the projected total cost, and you want that number to be 20-25% at least, right? On the flip.
Correct. Yeah.
Right. Okay. And then on your rental stuff, you want basically what I heard you said, I think you said a 2.5 point spread on what you build it to versus what you refinance or sell it. So for example, you would build it to a 9 cap, meaning like what you're all in, what the rents, the net operating income divided by your all in cost. Let's say that's, for example, a 9 cap, and you know that you can refinance it for 2.5 points less than that. So you can refinance it for a 6.5 cap, or you can sell it for a 6.5 cap. That's how you're valuing those, right?
Yeah, that's generally that kind of is the range you need based on what the capital markets look like to pull your cash out.
Yep. Good. I just want to make sure everybody understood how you value properties, because I think those are really important points to understand. So no, that was an awesome explanation. All right, Michael Cohen, same question. Talk to us a little bit about the type of investing that you do, how many properties you have, and how do you value the properties that you're looking at? You're on mute. You're on mute. There you go.
Yep, I started out buying single family homes, and I had probably about 30 or 35 single family homes, mostly Class A. I mean, they're mostly A because rent collection is easier, repair and maintenance is lower. The tenants seem to stay a little bit longer. The turnover is, when I have to do rental turnover, it's a little bit easier. I have a lot less eviction. I did start out buying, mostly everybody starts out buying stuff in Kensington. But I found that that's just it's very taxing, and the return is not that great. So most of the single families I have are Class A. Then I stepped up maybe 10 years ago and started buying multifamily and mixed use properties, 2 and 3 and 4 units, 5-unit buildings. And I found that they're definitely more profitable. And even if you have a vacancy in a 5-unit building, it still carries and it's still profitable. So I found that, and I don't have an exact formula, but I did find that everything's under one roof and all one place. So we found that the return is really, really good. And they're also when they have higher cash flow, the banks like it better. It's easier to refi. So the other strategy is I also bought a lot of land through the years. I mean, lots for 5,000 and 7,000 and 10,000, and I just held on to them. And some of these lots that I bought for 7,000, I actually sold a few of them off for like 50 or 60,000. So I just felt that land, buying inexpensive land, they're not making land anymore, so I've been holding on to those. What was the other part of the question, Noah?
Well, so when you're buying let's just say, talking about single family, how do you know if it's a good deal? What's the valuation? What metric are you looking at to determine whether it's worth buying or if it's overpriced?
Well, I'm not using an exact formula like Mike Stam, but my method is, it's a little unconventional. I mean, if we can buy it at the right price and we can get a contractor estimate and the numbers work, I buy it. I mean, I'm not buying, $5 million projects. I'm buying houses for 50, 60, 90,000. So, if you buy a house for 75,000 and it needs $50,000 of renovation and it's worth 220, it's basic math. So I don't have an exact formula, but
I've heard a lot of people that invest in single family homes for rent. A formula that they will use is just like a back of the napkin type of a formula, is they try to get their rents to be 1% of the purchase price of the property, right?
That's a good thing.
Just like a rule of thumb, right? It's not exact science because it depends on what the expenses are, but that's just a general rule of thumb to know if it's within striking distance of it being a good deal or not.
I picked up a lot of deals from things that fell apart, like in home inspections that went bad, or maybe it was a property that the person wasn't able to get a mortgage. In the beginning, I picked up quite a few deals that were fallouts, and they already had home inspections, and I actually got some pretty good stuff in South Philly and Fishtown that were just deals from my customers that didn't work out.
Yep. All right, Becky, how about you? How do you value a deal? What type of investing do you do? How do you know if it's a good deal?
So right now, the only type of investing that I do is I flip single family homes. And the way I analyze the deal is I actually I don't know if this is unconventional or what, how people feel about this, but I actually take a formula to figure out what the purchase price would be on the initial acquisition. So the formula that I use is sales price minus all of the fixed costs. So the cost for the purchase, the holding costs, the selling costs, the cost of the renovation, and then the profit that I want to make. So I look at the scope of the job and I'm like, okay, is this like a quick, 6-week in and out done? Or is this like a 6-month project? And if it's a quick 6-week project, I would be totally okay with making, I look at what I make in my real estate business, and if I'm making $40,000, then I would be happy with that profit in 6 weeks. And then you take those numbers, and then that would equal what the price is that I would pay for the property. And so I back all of those costs out, and that's how I determine if it makes sense. And I can't go above that number. So obviously I would start lower, and then that's like my cap. Like I'm not going to go over that number. And then obviously being a real estate agent, knowing the market, knowing what the ARV is, being pretty conservative with that number in case, there's a market correction or, COVID or whatever. So it's worked really well for me so far. And I've had 4 successful flips. I just started flipping in the summer of 2018. So yeah, that's how I analyze deals for single family flips.
That's great. So when you build your budget for these, you build the profit into the budget, how much you want to make, which is just a good business principle in any business, whether it's investing or whether it's just running your own businesses. When you put your budget together, you always want to figure out how much profit you want to make and make sure you build that into there when you're building your budgets together. It's just a good business lesson. Rob, how about you? What type of investing do you do, and how do you value a property? What are the metrics that you look at?
Yeah. So I'm dealing with a lot of people that are flipping or buying and holding. I made a little video that I'll put it in the chat on how I analyze a rental property using this simple free online calculator. But yeah, I mean, obviously the 1% rule, like you mentioned, is like a good rule of thumb, and you kind of can just say off the cuff, like, hey, it's $250,000. Is it going to pull $2,500 a month in rent for a rental? But then, like, digging into the numbers and the taxes and all that kind of stuff, how much maintenance you're going to expect based on the age of the property, that kind of thing. But I mean, the number one thing, in rentals is obviously positive cash flow. I try to stay out of speculating, and then also looking at potential for a forced appreciation through increasing rents through renovations in, let's say, a multifamily. And I also think a little bit, like what I'm trying to do in Florida. I'm doing short-term rental, and you can have something down there like that. Like I'm just running the numbers on it. Like if I bought a duplex, for example, it could cash flow somewhere around $3,000 a month. So on a single property in the maybe 400K range. So, it's also, I think, about strategy, and like thinking a lot about what you want to do, how active you want to be. And then again, I think also, like Michael was talking about, class of rental property too. So like if I'm in the hood, I want a higher cap rate. Cap rate is, your basic, how much you're making versus the purchase price. So like, in Coatesville, I may expect like a 12% cap rate. In Westchester, I may be okay with the 7% cap rate. So I think it kind of, depends a little bit on what area and what class you're buying.
Yeah, typically when you go into the riskier neighborhoods, the neighborhoods where, you may have more vacancies or may have a tougher time collecting rent, basically where there's more risk, you want to be able to get higher cap rate, more cash flow upfront versus a more established neighborhood, a less risky neighborhood, like let's just say Rittenhouse Square, for example. You're okay taking a lower cap rate, knowing that you're going to, get appreciation on the back end, right? The property is going to just always be stable and probably going up in price.
Yeah.
10 years ago, when I really started to invest in Philadelphia, it was pretty easy to find deals. I really didn't have a lot of competition back then. There were just a handful of people doing what I did, which was, just going out and looking for properties. I didn't have a lot of competition. I would make offers on properties and I didn't have anybody competing with me. I would get them. But it's gotten a lot more competitive over the last handful of years, and a lot more investors and a lot more developers in the market. Prices have gone up. It's just gotten way more competitive. So I want to talk now about how we're finding deals, because it's become more difficult to find deals these days, at least good deals, than it ever has been in the past. So Mike Stom, how are you finding deals these days? And what are your best sources?
Yeah. Look at, I think everyone, we used to feel the same way, relies on someone to, everyone goes to a million lunches saying, hey, I'm looking for XYZ, and they're waiting for someone to bring this amazing deal through their front door. It's not going to happen like that. You're going to have to figure out what type asset class or what type neighborhood you want to invest in, and you're going to have to try to identify how to find something like that. So for the assets that we look at, we use something as simple as the city's Atlas site, and we, comb through different geographical neighborhoods that we know we invest in and that we kind of understand the rents or the sales in, and we look for, lots that possess, lot dimensions or anomalies that we kind of look for to kind of identify a strategy, and we dig through it and kind of put the sweat equity into, as simple as people say door knocking or calling or getting in touch with the owners. It really happens that way, kind of more organically than people bringing you something, and then as you build, a track record and you start, being the firm that does a certain asset class, people will start bringing you deals here or there. But, I think it really stops and starts with the effort that you or your team or your partners, make to drum up the opportunity that you're looking for.
So we have 103 people on this call. I presume mostly real estate agents. If they have a good deal, can they bring it to you?
Yeah, of course. As well as probably another 1,000 investors in Philadelphia.
Exactly. But that's the thing. A lot of real estate agents will claim that they just don't know anybody buying certain things. Well, you're on this call now and you have at least 4 people, 5 people, if you include me, on this panel that all buy real estate. So now you know 5 people that you can bring deals to. It's just about understanding, for the real estate agents on the call, understanding what people want, what a good deal is, what an investment is, and understanding how to present it to them, right? Understanding the numbers, understanding how to analyze these, and sharing what a good deal is. Because I think we've all been in situations where people give us a deal. Hey, I have a good deal for you, and you look at it and instantly it's not a good deal. It's way overpriced, or it's not even close. And I think a lot of people are not educated enough to understand what a good deal is and how to go out and find it. The best deals that I've ever acquired myself were mostly deals that I went out and found myself. I'm walking around on the street. If I'm walking on the street, I'm not looking on the first floor of any property. I'm looking up at the roof line of the properties that I look for. And I teach my kids the same thing. I walk around my son now, he's 11 years old, and he goes, Daddy, that house has a window air conditioning unit in it. That would be a good property to buy. Or, hey, look, the paint's peeling off the front door of that property. That's a good property to buy. Or, hey, look at all that mail that's piling up in front of that house. That you could probably buy that house. He understands now what the things are to look for when you look to buy these investment properties. And it's about, you can find good deals from sitting behind a desk every once in a while, but the best deals you're going to find, the things that the things that you're going to be able to have the best luck with are when you're actually out walking on the street, not driving on the street, but walking on the street. Because when you're walking on the street, you'll see things that other people don't see. Everybody can see a hole in the ground. Everybody can see a vacant lot. Those are obvious. Those are obvious deals. But the deals that are not obvious are the 2-story houses that sit on a big property, that have a big piece of land behind it that you wouldn't know unless you were out there physically at the property. So, I encourage everybody, I'm kind of speaking on behalf of everybody. The best ways to find deals are you have to be out there in the streets looking for them yourself, talking to people, getting to know the neighbors, and just putting the word out that you are a buyer. If you want to buy stuff, you have to let people know that you're a buyer. All right, Michael Cohen, same question for you. Where are you finding deals? You're on mute again. There you go.
That's a great question. I'm really glad you picked me to talk about that because I really have some great input on that.
Okay.
I want to say that, real estate agents, if they bring me a deal, I will not take a commission. If I fix and renovate the house and resell it, I may even give them the listing back. And I've done that many times. So I'm a buyer. I'm not looking for a commission. I think I put that out all the time. And in conversation, whenever I'm at a closing or I'm on the phone or I'm with anybody, I let them know the area that I like to buy in, the type of property I like to buy. And I do get quite a few calls from real estate agents. And they have to know right up front, I will not take a commission. You don't even have to show me the property. I can go myself. I'm gonna be a cash as is buyer, and I can give you a decision right away. I can even write up the agreement of sale. So it really doesn't get any easier than that. But being out on the front line, deals should come your way all the time. Between coming from customers, dealing with wholesalers, title companies, fallout deals. I mean, you've got to work really, really hard to find the deal. And if you're only trying to accomplish 1 or 2 a year, which is the minimum that I think everyone should try to buy, 1 or 2 a year is not a difficult task. There's plenty of good deals still out there. And the thing is, the market's going to continue to raise in price because, like I said before, I was buying houses in Fishtown for $35,000. I think I bought something on the 1900 block of Wharton in the late 90s for like, $45,000 or something, something
That
ridiculous.
sounds like a lot for back then.
It probably was a lot. But I mean, things in Gray's Ferry you could have bought for like 15,000. So what's going to happen in 15 and 20 years? Obviously, the market's going to continue to rise. So I think a lot of people are hesitant. They're going to say, oh, it's overpriced. I'm not going to pay that much. It's never going to go up in value. But it is. It is eventually. If you're looking for a rental, eventually it is going to go up in value. And eventually, you may, have to flatten the curve or whatever the expression is now, but you will eventually, it will eventually provide you with great equity.
So those deals that you're buying, where are you finding them? Are you out knocking on doors yourself, or are people bringing them to you? What are your best sources to actually find those deals that you bought?
Well, to be honest with you, I go to a lot of networking events, which I haven't been able to do in the past 9 months. But like Mike said, going to luncheons, going to networking, shaking hands, meeting people, telling them what you want, telling people what you want, and they'll call you if they have it. And you can, and if you act quickly and you're paying cash, and the deals will come your way. I just wanted to mention while I have, it's a small commercial, but I just listed about 45 rentals. So I'm in the middle of putting, I'm in the middle of pricing everything. I'm pricing it at around a 9 cap, as you said before, which is an attractive rental. So I'll try to put that out on my website in the next, probably by Monday. We're working on marketing now. So I can bring deals to you. Everyone that's here and it's here to call. So it's hard, but you have to look at it through multiple different ways of doing it. Keeping yourself out front and letting people know that you buy real estate and you're easy to deal with. People want easy to deal with too. They don't want to have, a guy with, bringing in 7 contractors and making it difficult to get to the close.
Yep. The person at the top of the list that gets the best deals are the ones that you call on the phone, say, hey, I have a good deal for you. They don't even need to come and see it. They put a cash offer in, quick closing, no contingencies. Those are the best people. They're the ones at the top of the list that get the best deals, right?
Absolutely. at least, like I said, bring me a deal. There's no commission. I pay cash, I pay as is. And maybe we'll split the listing going out, or I'll give you, if you really, really bring me a great deal, I'll give you the listing going out.
Yeah. So you guys heard what Michael had to say. If you have any investors looking for a portfolio of already rented properties, he has a 45 unit package or 45 home package he's putting up next week. So check out his website. And Michael, if you want to put that in the chat, everybody will check out your website next week. Becky, same question to you. Where are you finding deals?
So actually 3 of the deals that I actually found on the MLS. So I want to say it's not impossible to find deals on the MLS. They all happen to be distressed properties. So one was a REO property that was listed with an agent. The other 2 were both estate sales. So obviously probate, they eventually wanted to sell, they listed it, and then I just got in immediately because I knew the area I wanted to look in. I had a search set up and I was alerted as soon as these properties hit the market. And I just got in before anyone else and, waiving as many contingencies as possible, having a cash offer, private money offer. It'll get the deal done. So 3 of the 4 that I bought, I found on the MLS, which I know a lot of people don't, a lot of people, say, oh, there's nothing to be found on the MLS, and there certainly is. And then another avenue that we just started exploring is probate, because probate, not to be morbid, but, with COVID and everything, people are dying and these properties are going into estates, and they, most of these people want to offload these properties. So getting those lists for probate, there's a great resource called PropStream. It's an amazing website that's you could have a free trial with it, but you eventually would have to pay for the membership, and you can find, you can put in criteria, whether it's divorce, if, there's, divorce proceedings were filed at whatever county you're looking in. So that could trigger, someone might have to sell their property. You can find other properties that belong to the people that are on these lists. So if they have another property in Florida or, out of state. So we've been handwriting letters to these people. If they're local, we'll go door knock them. So again, hitting the pavement and just doing things that other people aren't willing to do, you're able to live a life that other people won't live. So it's definitely not easy, but it's simple when you think about it. So that's where, so PropStream, sorry guys, I'm sorry about my internet, but I'm going to put it in the chat, propstream.com. So yeah, that was hopefully to answer the question.
Awesome. Rob, do you have anything to add? Any other places that you find deals that nobody mentioned yet?
I would just say that, deals, like you may look at a deal, and if you understand your fundamentals, you can really, I think that's really important, because it's like, okay, this property is listed at 220 and I'm getting it for, I need to get it for 150. Can I make that happen? And sometimes it's almost creating the deal because you understand your fundamentals. I've done that on a couple properties recently. Like I have a triplex under contract for a client right now that we got like 30,000-40,000 off of a 220 house. And then it made sense. So anyway, my point is just, if you understand the fundamentals of what makes a good deal, it's a lot easier to find one and make one.
Agree. The key to finding deals, and these are all really important things that were mentioned. Number one, you have to put out to the world that you're looking to buy properties. If I don't tell anybody I'm looking to buy a property, I don't get deals. The second I tell people that, hey, I'm looking to buy stuff, the deals start flowing in. Okay, especially as you start to establish yourself as somebody who actually closes on deals and is easy to work with, the deals will flow in once you let somebody know. Number two is establishing who the players are and who the group that you need to be involved with is, who have the deals, right? If I know that Michael Cohen has all the investment deals, well, I'm going to go meet with Michael Cohen and understand and get to know him and get to the top of his list so that when he has deals, he knows to call me, right? You have to get in the group of people who have deals. You have to understand who's buying stuff and who's selling stuff. And then you become a matchmaker. And then the third part of it is you have to understand how to be a good detective. You have to understand how to track people down. And there's a lot of different services that do it. You can use LexisNexis, you can use Clear. Those are all paid services. There's a good free one called TruePeopleSearch.com, TruePeopleSearch.com. And you can do a search by address, by phone number, or by name, and you can get people's phone numbers and email addresses, and it's fairly accurate for free. It's pretty good free service. And you can track people down. You have to be able to track people down and get on the phone and call them and ask them if they're willing to sell and put together a compelling offer for them. That's a key piece of it, is tracking people down. Some of my best detective work was identifying a piece of land I wanted, finding the owner of the property. It was listed in an LLC, searching the PA Department of State for corporations to find the name of who owned the LLC. It was registered to another LLC who had an address in Society Hill. And I looked that person up who had an address in Florida. And I finally found the name of somebody and searched for that person and looked through 10 pages of Google until I found a chat box or a blog post that she had commented on from like 6 years previous with a phone number and an email address in it. And that's how I tracked this person down. So you have to be persistent. You have to be willing to do the things that nobody else is doing to get the deals. It's a key part of being an investor or working with an investor client. Go ahead, Rob, you had something?
Yeah, I wanted to add something. And I think this is what I'm doing in Florida. I found the best investor agent in the area that I could possibly find and just told him to go to work for me.
Who was it?
His name is Chris Stafala in Tampa.
Right. Jeremy, write that down. We got to get him over here.
So he's like flipping 24 houses a year himself. So it's like, okay, I know you know how to get off market deals. So, I just told him what I wanted, why I wanted him, and put my goals in. He's got people cold calling and writing letters on my behalf so that, his team's going to get a commission, and his son's young and hungry. So, if you think about it, I think real estate agents are such an underutilized resource to people. Even if you are a realtor, it's like, okay, yeah, I'll pay you your commission, and you're getting me an amazing deal. Like, I don't care. And Michael touched on that, but I think almost just saying like, I am specifically hiring you to go and get this, and then he's willing to go and do it, write the letters, make the phone calls, doing it all for me. So it's like awesome.
Yep. You have to get into a good relationship with somebody who's going to be your bird dog, or somebody that's going out and finding properties for you.
Commitment's important.
Yep.
I told him I committed to him, and he went to work for me.
Yep. Find somebody who is hungry and aggressive and is willing to put in the work. All right, Mike Stom. This is an interesting question for a lot of people, and people may not be able to relate to this, but I think it's an important topic to go over. When do you know that you have too much on your plate, or you're stretched too thin, or have too much money out on the street, right? How do you stop yourself from continuing to do deals? Because if you're an experienced investor, you know what it's like to get the bug. You got the itch. You're addicted to buying deals and buying properties, and it becomes an obsession. And you sometimes can't help yourself from continuing to buy stuff, even when you have too much money on the street and you're stretched too thin. So you've got a lot of stuff going on. How do you know when enough is enough? And how do you know when to sort of pull back the reins a little bit?
Yeah, it's a great question. I think it's something, I struggle with all the time. I'm sure so many other people do too. But you're right, buying deals, it's addicting. And you always say, hey, we're going to turn off the faucet or something. Then someone puts something across your desk, and you kind of say, well, how can we not buy this, right? I think it all comes down to, no one person can, accomplish or scale, anything themselves. It's all kind of, what the team is around you. So the way I look at things is, we have a lean operation, and I know kind of what our output possibly can be. So the second I feel that our quality control our communication or our banking or equity relationships start to get tapped out, you got to start taking a look inside the organization and say, are we going to go higher to sustain the same kind of work output, or are we going to, tighten the reins a little bit and start to become a little bit more selective? I think it just depends on what type the deals are, the complexity. As funny, some of the larger deals we build go off with lesser headaches than some of the smaller ones because the contractors and the subcontractors, it's a higher class across the board. So, it's not all just sheer volume. It's something that, like I said, we battle every day. But, if someone had the answer to that, I'd be happy to have a lunch with them because I'd be curious to get their intake.
I was asking more for myself. The best deals come along when you're not looking for them. When you think like I've got enough on my plate, like I can't handle anymore, that's when the best deal is going to come across your plate. So you need to find a way to be ready for it or understand how to say no. Anybody else have any comment on that? If you don't, that's okay. But anybody else have any comment on that? Yeah, Mike.
Am I on?
Yeah, you're on.
Oh, I just wanted to say that, my day doesn't feel whole unless I have a problem with a rental or a contractor. And I think it's really exciting and it's energetic to get out there and renovate. I overdid it a little bit this year. We did 14 units, which is a little bit more than I normally do. I normally probably do like 7 or 8 a year, but the deals were coming to me. So even during COVID, the deals were coming to me. And I found that, it's like, a day without a contractor problem or a day without being able to find a refrigerator, it just wasn't fulfilling. So I think it adds excitement to your day. It adds excitement to your life when you have a challenge of, renovating and contractors and collecting rent and dealing with tenants. It's just, I just find it invigorating. And I hope that if anybody wants to talk to me about that, I'd be glad to, because there is a lot of negative aspects, but you can't let it get to you. And I'm sure, everybody out here has been jammed by a tenant and had a property destroyed, and it's really upsetting. But it's the overall, aspect of living with, out having something to do. If I don't have a renovation going on or a remodel or, 3 vacancies, I feel like, I have an empty day.
Well, you're passionate about what you do, and that's why it doesn't feel like work to you.
Exactly. That's a good point.
Yep. Becky, question for you.
Yes.
What's the biggest challenge you have right now in your investing and development business?
So, I think I overcame this challenge now, but my biggest challenge was finding good contractors. I think a lot of people can agree with that. I've had contractors that did really well for me on a previous job, and then they come to a new job and they're flaky, their pricing changes, they're unreliable, their subs aren't as thorough or diligent or, pay as much attention to detail as I'd like. So that's probably been my biggest hurdle. I have no issues finding deals. I have no issues with financing. I obviously have the real estate background to get them sold for top dollar, but finding the good contractors, and someone just asked me the question on how do you find a good contractor? What do you look for? And I leveraged my network, and I wasn't afraid to ask for help. And I think that a lot of people, they're afraid to ask for help, to seem vulnerable, or that they, might not know everything or know what they're doing. But when I reached out and I asked for help, hey, who do you recommend? Who do you refer? Who do you have great experience with? I ended up getting connected with a fabulous contractor that is actually, I think he knows you, Noah. He's spoken very highly of you. I'll message you who he is, but he's finishing a project for me right now. He's absolutely fabulous. And he was referred to me. Eventually, it was through a hard money lender that referred him over. So using your network to find great contractors is really key.
Nice. Rob, what about you? What are the biggest challenges you have in your investing and development business right now?
I think it's in my head,
How so?
So I think like whatever level we're all at with investing, it's kind of like a little bit of fear of pushing to the next level, or a little bit of fear of extending yourself, because there's just situations like that pop up. I think, like Michael said, right? Like as real estate agents, we are all fed deals all the time. You know, that's the truth, right? And then it's like taking ourselves and saying like, not making an excuse as to why not to buy it or why not to do that deal or to pass it along to somebody else. You know, so for me, like I was just challenged to do this thing in Florida, and I had about 15 reasons why I shouldn't do it. And then my my broker got up and did the math, and I was like, yeah, I'm just completely bullshitting myself. You know, and looking at that. So, you know, I think especially with a lot of people that are just trying to get started, there's like a lot of fear, you know, around investing and dealing with tenants and all this stuff. So for me, you know, again, I think like Michael kind of said too, is reframing these things as challenges or interesting or something you're learning rather than like something that stops you from taking action.
I'm surprised to hear nobody said what I think a lot of the biggest challenges are right now as far as dealing with the city of Philadelphia. That's a major challenge. Dealing with neighborhood associations, that's a major challenge. You know, these are some of the big challenges that I face, and just the different policies that are coming across the table now with the different taxes, the tax abatement, right? The tax abatement potentially coming to an end at the end of this year, but hopefully getting extended. That puts a bit of a wrench in some of the deals you're doing, because if you don't have permits by the end of this year, if they don't extend it, you're not having the tax abatement. That totally changes the underwriting of these deals. If they add a 1% construction tax, like they're proposing to do to extend the tax abatement, that also changes the scope of your deals. Because if it's a pretty large deal, to have to add 1% onto that for construction, that also changes things up. Construction costs are higher than they've ever been right now. If you follow the lumber index, like I do, it like over the summer, it was the highest it's ever been by, you know, like triple. So stuff is very expensive now. So it's costing a lot more money to build stuff. Delays from contractors is costing delaying projects, which in turn is costing more money. And, you know, the margins get slimmer and slimmer when these things happen. So I think those are a lot of the challenges that I face. All right. I have a whole bunch of questions. I'm going to ask one more question, and then there's so many questions in the chat box. We're going to open it up to Q&A here because I think a lot of people have questions that they want to ask themselves. So I'm going to ask one more question. And then if you have a question, I want you to unmute yourself and address the person that you want to answer your question for you. But one last question, and this is sort of, you know, opinion question. What neighborhoods are you guys focusing in on right now for your investing and development, and why are you picking those neighborhoods? So Mike, why don't we start with you? Mike Stamm, why don't we start with you on that one? What neighborhoods are you focusing on, and why are you picking those neighborhoods?
For sale, Graduate Hospital. You know, there's not a ton of inventory, especially well-built inventory. You know, so there's a lot of multifamily zoning. You know, the price per foot, you know, is able to absorb, you know, some of the expensive land purchases and the increased construction costs. You know, we've done well there. I think that market, you know, just proximity to Rittenhouse and Center City, I think it'll always do well. So that's one. On the rental side, you know, I kind of hit it. I kind of mentioned earlier, we focus really, you know, Germantown, Mount Airy, East Falls, Roxborough, Manayunk. Reason being out there is, you know, unlike, you know, Fishtown, Kensington, Northern Liberties, et cetera, where there's thousands and thousands of new units, out there were, you know, 15, 20,000 pre-war non-amenitized existing rental buildings. So you're not creating a market, but there was really no new construction out that way. So, you know, we've been, you know, pioneering some of those zip codes by bringing new product and kind of stealing tenant base for a slight premium that was already existing, you know, and there's not nearly the competition out there. Some of the construction sites are a little bit bigger. The land basis is much lower, you know, so we've done, you know, tremendously far superior compared to when we've, you know, fought over the same land prices that, you know, some of our competitors have. So, you know, for any of you guys looking for some stuff or looking for rentals, look Northwest Philadelphia.
Okay, that's good. Michael, where are you looking for deals right now? what neighborhoods are you focusing on? And
Yeah,
why?
I've been still buying in South Philly and Brewery Town and Fishtown, all the likely neighborhoods. I did get a couple good deals like on the Fishtown side of Kensington or the Kensington side of Fishtown, whatever you want to call that. So there is still some good, that's a really growing area right now. But I normally do my renovations in West Philly because I think that if you're going to do a renovation, a fix and flip, you need to go there a lot. You need to be there almost every other day to check up on the contractors. And I usually pay on Friday. So I like to be near where I live. So I've been doing West Philly, University City. And that, I'm going to tell you, that market has really, really taken off. I think that was like the last part of the city that really took off in value. So I think it's a great area. At least, there's some trees and it's close to University City. I think, I like the houses there. They're big.
Yep. But West Philly, University City, they're hot. They're hot right now.
Very hard. And it's really not that hard to get. I see a lot of stuff on the MLS. I see a lot of properties that are available. I mean, they're a little bit pricey to try to make money on a flip, but you know what? Make a low offer. If you make an offer, they have to present it to the seller. They're obligated to.
Yeah. I'm with you on that. I try to buy my properties, within a couple blocks of my house so I can walk and check them out all the time, because I find that if they're too far from my house, I can't get to them enough and I don't pay enough attention to them. And that's not good. So I try to find stuff close to my house also.
Save a lot of money if you go there more frequently.
Yep. Agreed. Becky, where are you buying stuff? Where are you focused on?
So for 2021, we have some really aggressive goals to start picking up buy and holds. And the area we're focusing on is exactly what Michael just said, Mantua, right outside of University City, the 19104. That area is so hot. If you're paying attention to what Drexel and University of the Sciences and UPenn, what the funding and the things that they're doing there to grow the campuses and to grow the programs, it's eventually going to, increase the demand for housing. So for the buy and holds, West Philly, University City, Mantua, and then the Temple area, North Philly. But for the flips, for single family, I'm actually not buying in Philly because I'm seeing on the residential real estate side, because I have a team with my business partner, Rafaelina Molino, and we, our clients are actually moving out of the city. With COVID, they are homeschooling, they're working from home, they want more space, they don't want any common areas with condos or, multifamily units. And we are selling so much outside of the city. And I grew up in Doylestown, so I have a lot of clients moving out that way. And the type of product that these developers are building in the city, it's high end, it's beautiful, it's that loft, that Brooklyn loft style exposed brick, the metal railings. You don't have that product in the suburbs. You just don't. I mean, it's very few and far between. So when you build the product that will bring the client, you'll sell the house all day long. So moving out to the suburbs for the single family renovations, I think is key. And that's what the market is going towards. They want more space, still with an okay commute. So that's where we look and where we buy.
Awesome. And Rob, finish us out. Where are you focused on? What neighborhoods and why? And then we're going to open up to Q&A. So if you have questions that you put in the chat or that you want to ask directly, as soon as Rob's done, I'm going to open it up for questions and answers for the rest of the time. Go ahead, Rob.
All right. So right now I'm looking in Florida because I like to vacation there, and my wife wants a house in Florida and I want it to be paid for by somebody else. So, I think that's an interesting thing to think about is, we can invest where we love going. And I was just, I think that's a cool experiment, and I'm vlogging the whole thing on my YouTube channel. But also, I live in the suburbs. I live in Westchester, PA. So I primarily help people invest out in this area, Coatesville, Downingtown, Westchester. I go down into Wilmington. I think Wilmington is interesting, and it actually has the highest rent to price values in all of Delaware, and the taxes are quite low there too. So I think Wilmington's a very interesting area when I talk about somewhere, you know, relatively local around here. And I've got two deals in Wilmington going right now for clients.
Awesome. So what questions do you guys have for the panel? We're going to open it up to questions and answers. So if you have a question, just unmute yourself, introduce yourself, and let us know who you're directing the question to.
Hi, my name is Alex. Can you guys hear me?
Yes, we can hear you.
Excellent. Thank you, guys. This is great information. I just want to get your sense in maybe any of you is investing in New Jersey. What areas are you guys looking at? And any other information regarding Jersey will be helpful, if any.
Anybody on the panel?
I'll comment on that a little. I'm not investing personally in New Jersey. My broker just did a deal in Wildwood Crest on a triplex and made like $350,000, and it cash flows like crazy. So I mean, that, I think a multifamily at the beach was pretty interesting, and he kind of got into the little bit nicer part of Wildwood.
The only comment I can make, I don't invest in New Jersey, but once you step out of your sandbox, you could lose money. So anytime I step out of my sandbox, I lose money. So I don't go to New Jersey.
Yep, that's a good point. And that's a key thing to pick up, you know, like I said before, I try to buy stuff within a couple blocks of my house so I can walk to it. But the other reason is because I know the market where I live. I know what the rental comps are. I know what the sales comps are. So when a good deal comes along, I don't need to run comps. I already know what the answer is, and I can just pull the trigger quickly and buy something fast. And I think that's a key thing. Once you enter into neighborhoods that you don't know a lot about, that's where mistakes can happen. That's where you either overvalue what you can get in rent or overvalue what you can sell stuff for, not understand the local ordinances on how to build in those areas. And that's where you start to get in trouble.
Thank you. This is helpful.
Anybody else have any questions?
Hey, can you hear me?
Yeah, Zach, we can hear you.
Hey, I just wanted to see, thanks for talk with all of us, but I just wanted to ask, as from an investor standpoint, what are some best practices that real estate agents that we can do in order to either find investors or help investors to the best of our abilities?
I'd say learn zoning. You know, it's if you want to broaden and add value to kind of your investor base, you know, so few realtors in Philadelphia actually understand, you know, land entitlement and the zoning implications. And I think people often forget that you make money on how well you buy something or how well you entitle something. You know, and it's not a matter of how much you're spending on construction. Construction is going to come down to a couple percentage points or your finishes. But, you know, the realtors out there who understand zoning and can add value to their investor clients, I think are some of the most successful ones in Philadelphia.
I would say regarding meeting investors, I've had success with that at local investor meetups. Just going and they have like big meetings. We have one out here in Westchester that I've helped a couple investors because of meeting them at meetups and just getting to know them.
I'll give you $1 million answer to that one if you want. I typically try to prospect the biggest guys in town, the guys that have the most amount of rentals, the guys that own the most amount of real estate, and continue to prospect them year after year after year until they finally call me.
I would say add value to their investing experience. So if they're flipping or they are renovating a buy and hold after you've helped them acquire it, I would let them know, like, you know, what level of finishes do they need to put into the property? What are the buyers looking for in that market, if that's the area that you work in as an agent? And helping them find the vendors for that. You know, if you have a great cabinet company or a wonderful marble company that you work for or work with, or a flooring company that you had a great experience with. And anytime you can add value, they'll just keep coming back to you and keep using you for the next property, the next property. You'll get the listing side if there's an out sale. If they're picking up another property to buy, you'll be the first to call because you're able to provide value that the other real estate agents aren't able to provide.
There you go. Good.
Good answers.
Thank you.
Any other questions?
Hi there. Do you want to
Go ahead.
ask first? Okay, I got it. I'm currently trying to get my license here in PA, and I'm actually right out of high school. So I'm planning to buy my first property within hopefully next year, or like at least like the latest in like 2 years. So I've been taking notes on everything that we've talked so far, but do any of you guys have any tips for someone like me who's trying to, make connections and be really good as like being an agent and also being a young investor, especially during this time? Yeah.
First, thank you so much for sitting in on the panel. I love seeing other female real estate investors. It warms my heart because it's such a male-dominated side of the industry with real estate. And I'm going to actually take this opportunity to put a quick plug in here. I just co-authored a book.
Okay.
19 other fabulous real estate investors. It's called The Only Woman in the Room, and it's knowledge and inspiration from 20 female real estate investors. And there are, I would strongly suggest men, women, pick up this book because this is real life, how to do real estate investing, every aspect of real estate investing, whether you're buying storage units, whether you're buying mobile home parks, whether you're burring, whether you're in the multifamily space, whether you're syndicating apartments, whether you're flipping single family. Every type of real estate investing strategy is in here, and that's real life from 20 females that are just totally badass women. So with that being said, I was able to meet the woman who compiled this and made this book possible from going to a female real estate investor meetup group. And obviously this is pre-COVID, but I was asked to speak on a panel for being a new flipper. And I met her through that. And I just networked, and you just leverage your network, and then the opportunities will come. And I'm more than happy to help in any way. So you can feel free to message me privately. Right now we're doing Zoom calls because, of COVID, but hopefully come the spring, we'll get back to meeting in person. And they usually are held once a month, and there's one in Conshohocken, there's one in South Jersey, there's one in Center City, and we'll probably be starting one out in like the Doylestown area as well.
Yeah. Okay, great. I mean, thank you. Is there a way I can ever, connect with you?
Yeah, feel free. You can send me a message in the chat area, and I can give you my contact info. My office is at 2401 Walnut of KW Philly, and we have a team of agents that we focus mainly in the retail residential space, but we also work in commercial. And then me and my partner both invest in real estate, and we have another agent on our team that also invests. So we're more than happy to help anyone that wants help.
Okay, great. Thank you very much.
Lauren, I believe you had a question.
Yes, and I apologize if my dog starts barking. I think the mailman just came. But so I guess my question is mostly for Rob. I actually just bought my first multifamily that I'm living in one unit right around the corner from your office in Westchester.
Oh.
I think from your broker possibly during COVID. But I've also been considering purchasing in the next couple of years something to Airbnb out of the country. But I guess my question is more like, since you're looking in Florida and you're not located in Florida, obviously finding a good agent in that area is important, but also, I guess when you're looking at the income that would be coming in, like, how are you factoring that? Because it's obviously not like a steady like rental property. It's it's more short term.
Yeah. So with the short-term rentals, there's a lot of different interesting trends that are going on right now with people wanting to rent them longer term. Like somebody from New York City wants to just go live in Florida for a while because everybody's working from home. So there's some interesting things around that. But when I'm thinking about it, like for short-term rental, you know, we're talking high vacancy percent on your investing calculation. So I put a little the investment calculator in the chat, a little video to an investment calculator. But yeah, you just when you're looking at like an Airbnb on a nightly basis, for example, you know, so you're saying, okay, I'm going to get 150 a night per side of this duplex. So I'm going to get 300 a night, and I'm probably going to get 20 nights out of the 30 in a month. Let's just say, to be conservative, if you're in like a place that's going to rent year round. That's another thing to consider, right? Like Jersey Shore is not going to rent year round. So you kind of just have to think about it from a vacancy standpoint and jack up those vacancy numbers to, you know, 20, 30%, something like that.
Okay, awesome. Thank you.
Sure. And we'll have to connect sometime, Lauren, since you're local.
Yeah.
What else? You got the panel for another few more minutes. Any other pressing questions you guys wanted to ask? I saw a bunch of stuff in the chat box.
I have a quick question.
Yeah, go ahead.
First, thank you to all the panelists. Happy Friday. Thanks for donating your time. I know I've met Michael Stamm before. I know he's certainly qualified to answer this question, but anyone else, you know, feel free, of course. The question is, as you're scaling up, so in my case, from a couple of dozen condos, then to some smaller multifamily, and then on to larger multifamily, how do you decide what you sell and what you keep? And is that decision solely based on accounting recommendations, especially when you're able to utilize tax strategies such as segregation, bonus depreciation, where you could potentially be paying nothing on your capital gains income?
Yeah, great question. Mike, you want to take that one?
Yeah, I mean, it's a loaded question, obviously, but look, I think it's important, you know, no two deals are the same. You know, you're going to go out and you're going to, whether you're putting your own capital up, you're going to use an investors or a bank. It's, you know, it's whatever the cost of that capital is, and, you know, what your investment strategy was when you put that deal together. You know, so some of these deals, when we put them together, we come out of the gates knowing we're going to sell it after a certain amount of time. We know we're going to, you know, keep it for the next 10 plus years. You also kind of run into, you know, we had a project, we built a, you know, a 50 some unit project coming out of the ground in Germantown, stabilized it right at the top of COVID, tried to take it to the permanent market, and the terms just didn't make sense to refi it. So we, you know, we're in a long-term capital gains. We've decided to sell it. So I think it's just, you know, an internal look at, you know, I don't think it's like, hey, you keep anything over 4 units, or there's a 5, you know, I don't think it's a number of units. I just think it's, you know, deal by deal, you know, you as the principal of the business have to take a look at what that cost of the capital is, what the exit is, what the marketability, right? You know, how many years left you have on the abatement or not, and, you know, do kind of an internal IRR calculation, and, you know, make the best decision for you and your organization and your partners at that time.
Thanks.
And sometimes the answer to that question is you need more money to buy another deal. And sometimes you have to sell some of your stuff to get more money to buy more stuff. I know that's the answer sometimes as well.
So is it, I'm sorry, so is the general thought, you know, if you don't have to sell anything, don't? I mean, I hear a lot of people saying, why would I ever sell something if, you know, there's a mortgage, it's covering, it's all good, who cares? I happen to think a little bit differently, but I'm just, you hear that a lot, which is if it covers, don't ever sell, you know, even, you know, so.
I think the answer depends on what your strategy is. I'll speak for myself. The answer depends on what your strategy is. If your strategy is to own one building and to make a lot of money off of one building, then you probably wouldn't want to sell it. But if your goal is to build up a portfolio, we talked about in the beginning, sort of tying it all back together about building wealth, right? Having more passive income than you have in personal expenses, right? Well, the question is this property achieving that goal? Is it giving me more passive income than I have in personal expenses? If the answer is no, then you have to continue to acquire more properties. Well, if you have enough money in your bank or have a partner or are able to come up with the cash to buy more properties, then no, you probably would not sell. However, if you need to sell that property to build your cash reserves up to roll it into the next one so you can continue to roll it, then you would probably do it at that point. So it really depends on what your strategy is. If the strategy is to build cash flow, try not to sell whenever possible. If the strategy is to build the bank account as high as it can go, then yeah, you're going to sell it so you can make money and have the bank account be bigger. But of course, like Mike said, there's tax implications every time you sell, and every time you sell, unless you're doing 1031 exchanges, you're losing money in taxes. So hopefully that answers. All right. Anybody else have any final questions? All
Yeah.
right. Yeah, go ahead.
I could just say, I love how Becky came alive and started smiling at the opportunity to give the young lady the information that she did. Her whole face lit up and she just came alive.
Yeah.
Thank you for that. I love helping people and I love seeing other female real estate investors because, you know, as everyone knows, it's all the other people on the panel are men. While we love men, I mean, there needs to be some more females in this space. And in 2020, there's just a study done. The biggest transfer of wealth right now is going to women. And now's the time to help with your family's expenses and the finances and create that wealth for your families and for yourself to make sure you don't ever have to rely on a man to be successful and reach your dreams and your goals in life.
That's right. And if you haven't gone out and bought Becky's book yet, go out and buy it. Hold it up again. Hold that book up and put the link in the chat box of where they can get the book for free.
It's for free. But it's available on Amazon and on Kindle, and I will certainly put it in the chat box.
Awesome. Good job. Well, great job to all the panelists. You know, this is always a great topic to talk about. If you have been afraid to go out and buy real estate, now maybe you have some more confidence to go out and do it. Just because there's risk does not mean that it's risky. So be willing to take that first step, educate yourself, go out and start building wealth, start buying properties. You know, you have the greatest advantage as a real estate agent. You should see the deals before anybody else sees them. So if it's a good deal, you should probably be buying it most of the time. And if not, know who you can sell it to. So go out, get wealthy, get educated. And thank you again for being here today. We have another great session starting Tuesday of next week at 1 p.m. We hope to see you for the second week of Education Week. Thank you guys for joining us today and have a great weekend. Take care.
Thank you, Noah. Good job.
Great job.